What is up, everybody? We are back for our Tuesday stream here with Benzinga. We're going to start out with Bitcoin just because it's kind of been, something we've been doing every week. And obviously, it's been making some moves in the last, 24 or 48 hours. So we're going to start there. What's up, Antonio? If you guys got anything you want me to look at the end of the show, drop some tickers in the chat, hit the like, subscribe, all that good stuff. It really helps with the algorithm to help us get this show to other people who might be interested. So as far as Bitcoin, if you guys follow me on Twitter, we did talk about it the other day. Don't mind the drawings here. This was a joke, but what we were pointing out is Bitcoin. We were talking about this bullish dragon formation. I do have it on another chart without the extras. And we had this supply line coming down. We had this supply line coming down from the initial drop back here, May 9th. It's a little bit off here, but we did end up breaking out of that, right? We've been chopping around a little bit, and we ended up taking a dive these last couple days. Trying to find the chart here. There we go. And this is the Wyckoff chart we've been looking at. It's supposed to represent an accumulation phase that Bitcoin's going through. After the big sell-off, we've been trading sideways for, it's been just about a couple months now, right? But we haven't done any technical damage to the structure that we're looking at. This trading range between, about $29,000 and about 42,000. I think that was the number I've been talking about personally that will really give me that bullish sentiment back. But again, we've just been consolidating. We talked about this initial spring back here on the 22nd of June. The back test, we made a nice impulse up, this 5-point Elliott wave up, and caught some rejection up here at about $36,000. And since then, we've just been consolidating. But there is a but. I do want to point out the fact that we've got this reaction going on here. And as of right now, if this 4-hour candle closes in the next hour at these levels or above, you will have a piercing line reversal Japanese candlestick pattern here. And that, in summary, is basically you get the bearish engulfing candle down. We got this level, previous level of support, and this 4-hour candle that we're on right now is engulfing over half of the body of the previous 4-hour candle here. And we still got an hour left. But you do have to wait till the full 4 hours has completed, because this very well could, track its way back down and invalidate itself. But that is something I'm looking at. I did have another level, I think about 31,500, that would have given us a bullish Gartley pattern. This would have been X, A, B, C, and then D would have ended at the 1618, or the 786 from X to D at about 31.5. But this is the second time we've gotten a reversal at this level at about 32,440. And for what it's worth, that could be something here. At the same time we are getting that reversal pattern, we are also possibly developing bullish divergence, because you've got the price coming down, right? Lower prices, but at the same time, you're showing less levels of negative momentum on the MACD. And if you look at the RSI, we do have the same thing going on, barely, but it's there. This would be more of a continuation form of divergence. We have pointed out before, I like to look for this M-shaped formation on the RSI, the same way that we would look for an M-shaped formation, whether it's an XABCD pattern or a harmonic pattern. Seeing the same type of formation on the RSI is something I look out for. And it does look like we are getting a reaction at the bottom of the RSI range down towards about 30. So that would be great if that plays out. But the way the market's been going, this whole Wyckoff accumulation structure, ultimately, the idea behind this is, this is a structure that forms while, big money, the composite operator, hedge, whoever you want to consider a whale in this type of market, that's where they're going to start accumulating Bitcoin. And at the same time, they're going to try to suppress the price. They're going to try to trick short-term traders out of their positions, with whether it's false breakouts to trap the bulls on the top side of this range, or if it's these, bullish pin bars or heavy wicks to the downside that are going to trap the bears, because the bears see this price action, they start taking short positions, and before these candles are closing, they're reversing right back up, and they're keeping us out of this range. The lower side of this range has not been able to catch a closing candle once. We have not closed below, I think our lowest close on Bitcoin's about 30,800. And the idea is, smart money, the whales, composite operator, this is where they're going to be accumulating. And in order to suppress this price and keep it in the range, we've been developing these distribution patterns, these rounding top distribution patterns, which essentially, they sell enough of their position to keep the price suppressed. And retail traders are the ones who are going to be, they're going to panic sell when we start seeing these crashes. People who are buying up in this higher part of the range, when they see it start moving down, they're going to sell. And unfortunately, for a lot of short-term traders, they're losing money left and right, which if you're talking psychology when it comes to Bitcoin, that's good. It's not good for the people who are losing money, but it is good for the psychological, it's the whole idea of the pattern, right? You want to shake out the people who are using leverage. You want to shake out the short-term traders, the weak hands. At the same time, the bigger money, the smart money is going to be accumulating. They're going to be selling the tops. They're going to be buying the bottoms until the demand for Bitcoin or for any asset that's going through, this type of accumulation pattern, until the demand outweighs, the selling pressure, it's going to continue along. But what we have been pointing out week after week on this asset, we are starting to develop, this could be invalidated still, but I have a lot of confidence in the fact we are starting to develop, a rounding bottom to this accumulation, right? Essentially, this is the point. We're getting close to the point where we're either going to need to invalidate this structure or we're going to need to break to the upside. It's not investment advice. I do believe we are going further to the upside, and it's going to be soon. And my main reason behind this, and this has kind of been my selling point for the most part, is this 3-day chart on Bitcoin, right? We still have this bullish dragon formation forming, and we have broken that supply line. And on this 3-day chart, this would be the back test that we're doing now, right? On the bullish dragon, you've got the head. This is the head up here. You've got your feet, one here, and this would be considered the spine. And the idea is once you break the spine, which is the supply line, that is when you would start to see a movement to the upside. And what I really want to focus on this 3-day chart, if we could pull up this MACD here, is you've got from about March 20th until now, you have had this giant negative histogram on Bitcoin. The likes that on this chart, this only goes back to about 2018. But you haven't seen negative momentum like this on Bitcoin in a very, very long time. And to me, that indicates price suppression, because you have been waning. You have been losing this negative momentum since about May 25th. And we have just now gotten these two little baby positive momentum islands on the histogram. And at the same time, if you're looking at the RSI, even the RSI is not oversold at the moment, but it has been, while this price has been coming down, the RSI, if I could get my chart working here, the RSI has been moving up. That means this asset has been gaining strength while this price is coming down. And the same thing, I can't even fit the histogram island on my chart. At the same time, this price has been coming down since back here about May 20th. We've been losing value in the price, but the negative momentum has slowly been waning. It's been moving positive. It's been, the same way that the RSI is gaining strength. That's the way you would look at the formation on the MACD. All right, so we got a few tickers in the chat here. Yeah, this is BTC, Antonio. I'm sorry, I don't have a banner up for this. Let me toss that up there so we don't get confused. It's normally how we've been charting. I'm sorry, that's normally how we've been starting the stream every week. I guess it's just kind of been what we've been doing here. It's, there's a lot of people with their eyes on this asset because essentially Bitcoin is controlling the movement of the entire crypto market. All the different altcoins are valued against Bitcoin, and essentially that's why Bitcoin's such a hot topic, because without Bitcoin moving up, you're just going to see these altcoins continue to bleed out. So this is it's important that Bitcoin starts to gain some strength here. And personal opinion, fair disclosure, obviously, I am invested in Bitcoin. This is something that I've been tracking, for the last 5 years. So this is an important asset to watch if you are in crypto, because essentially everything's going to follow Bitcoin, at least to this point. Not many assets in the crypto market have lost their correlation to Bitcoin. But I'm going to move on from here. We don't have really anything new. It's still the same dance sideways that we've been doing. And, the idea, again, of this structure is to shake out the weak hands. It's to exhaust all of these people trying to take short-term positions on Bitcoin. The patient people in this market will be rewarded, in my opinion. But again, if we do see lower lows on this trading range that we have developed, it would invalidate the structure. I don't think that's going to be the case. But that's not something I'm trying to sell to you. I'm only talking charts here. Huge sell-off on APPS. Yeah, we could take a look at that one, Frank. I got a couple other ones I wanted to go over real quick as well. We'll take a look at APPS, and then we will look at a few of these and get to as many of the ones we've got in the chat here as possible. So APPS, this is not one I have any information on in my chart, but what I'm going to do is do this for you. I'll show you exactly how I break down a chart like this. And the first thing, if you do follow this stream, the first thing I'm looking for on an asset is a sale. I do want to see some type of sell-off. I do want to see, you know, a support level found and respected. I do want to see a shift in the momentum, the RSI gaining strength from an oversold territory. So we're going to start out on APPS and put a couple levels in here, right? This is one that's important back here, December 22nd. We do have these candle close tops back here. And it looks like your next real respected range is, you know, we're kind of in between ranges here. I do like this level because if you look over here to June 22nd, not only was it respected as resistance, but you have had a couple wicks down and you do have a candle close and an engulfing candle off of it. So it has been respected as support as well. And I do like, you know, like we were talking about before, we do have a sell-off on this asset. You do have an M structure forming. It almost looks like a bullish shark here to me. Or a cipher. No, not quite deep enough of a retrace. If it was a cipher, we would have wanted to see a 786 here. It's close. So basically, what I would look for if I was trying to take a position on this asset, Digital Turbine Inc., I would want to see, you know, I would want to stay above 59.71 first off. But we do have this impulse up. We've got, you know, this M shape forming. Now, if you look here at this 59.71 zone, we have not gotten a back test of it. We broke it back here May 20th. We've made our way up and we're starting to come back down. So realistically, if you were a swing trader, what you would want to see is you'd want to see that support level, or I'm sorry, that resistance level broken and then back tested. You know, just to confirm that what was once resistance is now support. But if we take a look down here at the oscillators, you do kind of have the same M-type formation forming on the RSI, but you haven't quite reached, on the daily chart, at least, you haven't quite reached that oversold zone again. And, you know, that would be ideal, not necessary. You know, if we make a reversal up here on the RSI, you know, that would still be a bullish indicator. But right now you're kind of trading between 67 and 59. So, you know, you came down here July 9th, a few days ago. I would like to see a confirmation low and see some support at that level at 59.71 before you make a move to the upside. You know, that would give traders, swing traders specifically, a confirmation that we do now have support at that level. And if I was looking for targets to the upside, I would probably look, you know, generally on an M-shaped formation or a harmonic structure, X, A, B, C, D. You know, the A and the C would be likely targets. If we did break above this 67.93 zone, that's where I would be looking. And if we look left back here, you've got, you know, support and resistance right around 75 to 77. That's where I would look for a profit-taking level on APPS. If you look down at the MACD, I do kind of like the MACD, right? On the daily chart here, you've got MACD is just barely, but it is making, you know, between the X and the D, you are making more lower levels of negative momentum while the price is moving up. So that would be hidden bullish divergence, and that would imply a bullish continuation to the upside at this point. Your Stotch RSI is right at the bottom of the range. You know, that's positive. But as long as you stay above 59, I think you're good with APPS. We could pull up Twitter, Deepak. I think that's the next one, right? Pull up Twitter. Twitter is one I haven't been watching in a while, but it is one I am invested in. And the same thing, you know, ideally, you know, just glancing at this chart right here, I think I've got this charted out on another chart, but this would have been the structure that I would try to identify on Twitter, right? This is an XABCD structure, and from the C point up here, you had an 88% retrace down to D. And the way I would have looked at this one, right, is you've got this resistance back here. Looking at some resistance right here at $50.24. So that would have been my inflection point on this asset. You know, not only has this asset retraced 88%, but at the same time that it was retracing 88%, if you look here on the RSI entered oversold territory right at this support after an 88% retrace on this asset. And at the same time, not real easy to identify, but I mean, you almost had, you could see there's barely more negative momentum between B and D here, but there's a huge difference in the price. You know, we marked down from about $60 all the way down to about $50, and that's where you saw the reversal. At this point, you know, I can't tell you this would be a great place to take along, but if this is an asset you're invested in, you know, this area right here around $72 is probably a top profit taking zone. You know, you've got this candle wick high February 10th at about $69, and then $71. You've got candle close, candle wick, rejection here, April 15th. So you're at the top of the range. So if this is an asset you are invested in, or if I was invested in rather, again, not advice, but it's just an area that you would expect, you know, traders who are, you know, swing trading this asset, they might take profits in this zone. And if it was me, this is an area I would probably take profits as well. And I would probably look down here at $61. You see, we got some resistance down in this zone before we made this move up, but it never got back tested. You know, that's something you want to see. And if this asset does make a retracement here, you know, that might be a zone that we might retest just to give traders the confirmation that this resistance zone is now support. And if you look here at the RSI on the daily chart, you were overbought. You were showing bearish divergence on the MACD. Even though this price was still going up, the MACD shows you less positive momentum on this asset, and this positive momentum is waning. It's going negative where we're at right now. So I wouldn't be surprised if this asset does correct a little bit, come back down to a that $61 zone. If we look left back here, you know, maybe it catches some bids at 63 between these two zones. And then, you know, if it does move higher, that would be a place where you could, once you identify support at that level, you could enter, or you could add to your position if you were trying to take a long on that asset. Antonio, I got you with CLNN. which apparently had a really good day today. Now, what is this one? Health technology, pharmaceuticals. You got the volume. One thing I like to look for on any asset is at least 1 million volume, and you have just about 8 times as much volume today as you normally have on this asset. Now we're kind of going to be looking back because, realistically, this is going to be a tough area to, say that now is a good time to take a long position. But just for education here, right? You've got this massive sell-off on CLNN. You got the massive sell-off, and then we formed the same thing that we always talk about. You got this M formation, this XABCD pattern, which you've got between X and D. You're a little bit, I like looking for the 886. You overthrew that a little bit. That could have been a volatility thing. But from this point here up at C, which was resistance back here in December, you've got over 100% retrace from that point. That came all the way down and past the 1618 retracement. If you were going by candle closes, it's a little bit closer to the 1618. So for this asset, I'm going to try to, if this is something you were trying to take a long on, this, you're literally at the top of the range, right? Because down here, the bottom of the range would have been here at about 730. And you've doubled since the bottom, since the pattern completion zone of this XABCD structure. If you're looking at the RSI on the 4-hour chart here on CLNN, you were way, way overbought. You haven't started to lose negative momentum, but I've got a feeling you haven't been able to close above that 1430 zone. More than likely this, like I said, traders are going to want to take profits at this level. You've got rejection back here. You've got rejection, rejection, rejection over and over again in that zone. And if I was going to take a long on this asset, I would want to see, either this zone broken at about 1430 and then back tested, right? You want to break through it. You want to come back down and back test it as support and then move. Obviously, you'd like to see some kind of confirmation on the oscillators here, but, just the back test, at least it'd give you a price to lean on. Without that, I wouldn't be surprised. Looking left here. Yeah. If you can't break above 1430, I mean, I would think you're probably going to come back down and test, whether it's 1194 here or, lower $11 zones, because you never got that confirmation. You had this massive engulfing candle through this old resistance here, but you never back tested it. You never got the confirmation that resistance is now support, and that's something you'd really want to see, especially after this run up that this asset has had since, the middle of May. Let me remember what stock this is. SOS. We could take a look at that one. So it's one I keep an eye on, especially when Bitcoin's moving. And this is one that I've been watching because of the same type of stuff we're looking for. You've got this XABCD structure on the 4-hour chart here. After a massive sell-off, you've got the XABCD, which essentially, if you're not familiar with, the stream, an XABCD structure is something you would want to find in the right context. After a sell-off, A structure like this presents itself with the right variables, and it basically indicates to you that there's a momentum shift happening, right? You get the sell off, the structure forms, and then you'll start to see the trend move to the upside. And this one has been less than exciting for some time here. We've been watching since the end of May, where you did get a reaction at the lows, which happened to be right here at support. This old level back here looking left, I mean, it's been respected multiple times all the way back to 2019 as a critical level for this asset. You don't want to really see it fall much lower than where it's at. And I think if you're looking at the daily chart for SOS, you're still building negative momentum. But I do like the fact that if you look at the Stoch RSI, you're down at the bottom of the range. You're literally sitting on top of, this oversold line. And if it did reverse at this point, right, you've got the price making lower lows. The MACD is not going to, well, if the MACD reversed right here, this would be a form of continuation divergence, because you've got a double bottom on the MACD showing you that this asset is not making lower levels of negative momentum, even though the price is still coming down. You're not able to make lower levels of negative momentum. And the same thing would go for the RSI, right? RSI, you're getting this double bottom. Price is still coming down, and you're at support, right? Yeah, you're at support. It's been respected multiple times throughout the history of this asset. So if you were trying to take a long position on this asset, I would want to see it reverse here. If you fall underneath, I mean, literally right where you're right on top of the, you're right at the bottom of the zone here. If it fell further down, I would start to be a little bit worried. Yeah, this is definitely an area for SOS you want to see hold up. But at the same time, SOS is a Bitcoin sympathy stock. So you want to see Bitcoin start to make some moves. You want to see Bitcoin move up a little bit, because this is an asset that will follow Bitcoin. This is a miner stock. You got normal volume on it right now. But if Bitcoin makes a move here, you're going to see a move on SOS. So you kind of got multiple ideas colliding between Bitcoin possibly making a reversal. Some of these Bitcoin sympathy stocks are trying to make a reversal here. But you'd really want to see some confirmation. If you're looking to take a long position on this asset, if you did take a long position here, it's something I would personally want to layer in on, because if it does fall beneath that level, looking on the daily chart, you've got a lot of gaps down here. It's really, really choppy below this area. And this was a nice accumulation zone down here. So that's something to keep in mind. This is one, if you do not have a position in the SOS, I would wait. If you do have a position, this could be the point it turns around. And before we get BODY, I can take a look at that one for you, brother. Another one I did want to take a look at, and it's not so much any asset in particular, but real quick here, the whole cannabis sector. I've looked at a couple charts today. CGC, CRON, CRON, Tilray, TLRY. They're all three of them are at this inflection point, right? If you look back here, back to 2019, even back here to 2018, This is a major level right here. And all three of these charts are kind of showing the same type of variables, right? If you look down at the MACD's double bottoming here, and you're making slightly lower lows on the price after a big sell-off. You kind of got this M structure forming. Same thing on the RSI. You got the M structure down here on CGC. Cron, the same type of stuff, right? You got this support level here at 767. You got the massive sell-off that's been, basically all of 2021 almost. You've been selling off. You fell below this critical ice line. You've sprung up. You've come back down. You back tested it, and you have gotten a reaction. And at the same time, you were showing bullish divergence. You've got this M-shaped formation forming on the RSI. You were at May 11th, you put in this double bottom here on the RSI while you were starting to make higher highs again. And as of right now on the daily chart, you've got this negative momentum waning and moving back to the upside. And if we do continue to move up, you would have hidden bullish divergence, which is a bullish continuation indicator where you're making more or higher or lower. There's more negative momentum on this asset while you're making higher prices, which would imply, impending price action to the upside. And if I was looking at some of these levels to the upside on Cron, I like 982, 1125, and 1316. And the same thing, if you look a little bit further back here on Cron, back here from, just about New Year's, you've got this M-shaped formation, a larger M structure here, and you've got a reaction at the PCZ. If we were doing, an XABCD on this structure, that's the stuff you want to see. That's, you'd want to see a reaction here, and we got one. The same thing with Tilray. Same thing, right? You got this January 7th support, and that's back to 2020. You sprung above it. You had this major sell-off. You fell below the support, but you sprung back above it, and now you're back testing it as support. So with all these assets kind of giving the same type of variables in the cannabis sector, this is definitely something I would keep an eye on, because they're all showing, bullish indicators on the oscillators, bullish indicators on the price action. And as long as they stay above these levels that we've identified here, you could see some really, really dramatic upside. Same thing with gold too. I really like gold right now. But don't tread on me. We're going to take a look at BODY for you, the Beachbody company. Well, you definitely got a sell-off here. You almost look like you're putting in a double bottom here on the daily chart. All right, so I'm on the 4-hour chart now, BODY. Let me see. See, I do like the price action, right? Because you've got your sell-off, all the way up here from, you got resistance at about 1279, and you sold off. You've got this wick low at 860. You fell below it, but you got this bullish pin bar and the spring that brought you back above it, and now you're retesting it possibly as support. which as long as you hold up here, that would be a bullish indicator. But if we're looking down here at our oscillators here, you know, the RSI looks good. You're down. You just recovered out of oversold territory. You are making higher lows so far if it doesn't retrace further down. Your MACD, it looks like you're losing positive momentum. On the daily chart, I mean, same thing. I would really want to see a little bit more information here on BODY, because what you want to see is, you know, obviously you've sprung above, you know, this old resistance here. You've come back down and back test it, but you haven't broke back below it. I would want to see a little bit more confirmation of the upside. If we move to the lower time frames, we might be able to get a little bit of help, but no. See, even on the lower time frames, it looks like you're still trying to break back below it. But this would be your zone. This would be your buy zone for BODY. You know, between 860 and 834. If it fell below that, you know, I would consider this invalidated. But if it holds up above 860, or even, you know, if you got a little more tolerance for risk, as long as it holds up above 830, you know, I would definitely be looking for, you know, $10 would probably be the target I'm looking for. You know, if we were trying to size up a position here, and you took along here, right where we're at, you got about 5% risk to the downside, and to the upside, you've got about 15%. So that's a 3-to-1 trade. You know, that's something that I would, you know, take a risk on if I was trading this asset, which I'm not. Again, I would like to see confirmation, but this is an equitable trade. You've got 5% risk, 15% reward, because on the 4-hour chart here, and I'm willing to bet, yeah, on the daily chart, that would be the zone I would be looking for to the upside as well, at about $10 on that one. Tesla up or down tomorrow? Tesla's one I am in. We identified on Tesla here this XABCD pattern with the spring and the back test, and that's where we identified our long position on Tesla. I'm still in it. You know, we were looking at this $700 zone as a potential profit taking level, and if you know, so far we've gotten rejected there over and over and over again. But you know, if you break it down a little bit simpler and zoom in just a little bit, right? You know, we had an additional XABCD. You've got, my cat decided to join us. You know, you've got this spring. You know, we made another attempt at $700 here, and it looks like we're coming back down and back testing that spring, right? We sprung above 662, but we never back tested it. So, you know, this action we've seen to the downside, it looks like this has all been today, right? Yeah. I mean, this doesn't really throw me off. If you break lower than 660, you know, you might see a little bit more downside. But I think, you know, if you're long-term trading Tesla, I think there's a lot more upside coming. Not advice, that's an opinion. Just because I really keep up with what Tesla is doing, and I think there's a lot of stuff that hasn't been factored into this price just yet. As far as tomorrow, I mean, that's not really something I could call with technical analysis, but this would be an area that Tesla would reverse, back to the upside if it holds up. If it doesn't, you might see, we might come back down here to 640 again and get a back test, because if you look closely, we sprung above 640 and we never back tested too. So, that might be a target for the bears on Tesla. All in all, that wouldn't change. It wouldn't really change my sentiment, but that $700 zone, I mean, that's a very, expected take profit target level. We saw it over and over and over again, and that's also the top of this XABCD. PLTR planner, and I could take a look at Boeing too. I think we got enough time. All right, so Palantir is one that we identified on stream back here in May. Not sure why my phone's making these noises here. I'm sorry about that. So yeah, this was our profit taking level on Palantir. It does look like it started to correct back down. So if I was trying to identify support and resistance here, same thing we were just talking about. Once you spring, if you look on the daily chart, I think it's a little bit easier to see. You've got that clear resistance back here, not only in the fall, but it was resistance. We identified it as support here in May. And then it acted as resistance again at 21.18-ish. You've got wicks down to it. You've got candle closes stopping at it. Clearly, that is an inflection point. That is an important area, and it looks like more than likely Palantir is probably headed back to 21.23. That would be my guess. Looking at this chart, you got a nice straight line back up to that resistance level at 26, and more than likely you're going to come back down to 21.23 for the back test. And if you look down here, just for a little bit more of an edge on Palantir, right? You've got, that price action is clearly moving up. You're in an uptrend, and your MACD is making lower levels of negative momentum. So if that, if we fall back down to support at this level, and this negative momentum starts to move back up to the, positive, if it starts to wane a little bit, you'd have hidden bullish divergence, which would be a bullish indicator that there's impending price action to the upside expected, implied on this asset. But that's where I would keep my eye out. I really like that $21 area. You could see historical price action correlation to that area. Last time we got rejected up at this $25, $26 zone. Guess where that price went? You got rejected at 26, back down to 21. You got rejected at 25, back down to 21. You got this partial rise here. You fell below 21, you came back up, and you got rejected at that same zone that you got rejected back here in March. So more than likely, just looking at the historical price action, when you get rejected here, you go to 21. That's the next thing that happens historically. It doesn't have to continue to happen that way, but that's exactly what it looks like you're going to do. And that's kind of a positive thing for a swing trader, because if you get support at this level and you get an edge on the oscillators down here, if you get a double bottom on the RSI in oversold territory with hidden bullish divergence on the MACD, that would actually be Class C bullish divergence on the RSI. That would be a great place to take a long, because at the same time, now you've got a price level to lean on. That, this is historically support and resistance here. So if it fell beneath that, you could use this wick back here at, 2012 as a stop loss. If it falls back beneath that, that it's going to come right back down to $17. Just look at the history, right? Last time you broke $17, you went right up to $21. Last time you broke $21, you went right down to $17. So if we do not see a bullish continuation at $21, Palantir is headed straight for $17. It's just, the odds are stacked against you. But I do think this would be a really convenient place for the price action to reverse back to the upside, especially if you get confirmation on the oscillators for Palantir. The man from the West, as far as options go, that's not something I could really just touch down on, because options are really, they're really complicated, and it's the timing and stuff on that's really important. But Benzinga does have another guy who does options, and he goes into a lot of detail. He really focuses on that stuff, and the guy's brilliant. I would definitely recommend checking out his show. I watch it myself. Because options, they're very profitable, but you can lose a lot of money real quick if you're just not sure what you're doing. Sofi, Tyrone, I got you real quick. That might end up being the last one we got time for. And we're on the daily chart here on Sofi. And again, first thing we want to do for Sofi or any asset, I like the daily chart first. If you're, short-term swing trader, that's my go-to. The weekly, if you got a little bit more time. But the first thing I'm seeing, obviously, we got that initial wick high at 1394 that never got back tested. I mean, you could almost consider that a back test, but I would want to look at the lower time frames. But if we're looking at if you hold up at this 1576 level, I like it, because same thing we were just talking about on the daily chart, you've got your prices moving up. You're possibly developing this higher low here on the price. If you're looking for bullish divergence, you want to go with the candle closed, not the wick. But you are making, if it does reverse here at this support level, you would have a higher low, which would imply that, you've got accumulation going on. More traders own this asset and they're holding on to it. And at the same time, even though that price is going up, you've got your MACD showing more negative momentum, which would be hidden bullish divergence, which again, at support with hidden bullish divergence, it's indicating that there is impending price action continuation to the upside. That would be a bullish indicator that says this asset is going to continue to make higher lows. And if you look at the RSI here, it looks like the last time the RSI was down at these levels, you've got a higher low from that point. But I like that it's approaching oversold. You're losing negative momentum. The stop to RSI is just about bottomed out. So again, you might have not only hidden bullish divergence on the RSI, but you've got it on the MACD. you're at a support level. If I was looking for targets on the way up, if we do reverse here, you know, first place I would probably be looking. The chart's a little bit choppy, but I would probably stick with this. This is conservative over here. Back in January, you got that candle close at about 1914. And if we identify, you know, historical price action correlation between 1914 and the support level we're at, last time we touched down to 1576, we went straight up to 19. When we got rejected at 19, we went straight down to 1576. We fell underneath 1576. Guess what we did? We went straight back up to 19 and we broke it. And then you've got this distribution going on here, and then we fell back below it. And I would be willing to bet on the lower time frames. Yeah, I mean, if you're looking even on the 4-hour chart, when we broke 1576 back here, May 17th, we broke it, but we never got a back test. So if you were a swing trader, if you were waiting for an entry on this asset, this would be, you know, you've got an edge here. But personally, I would wait for confirmation. I would want to see a reaction that this old level of resistance is now support once again. And if we were targeting an area of a profit-taking level to the upside, I would look to 1914 as a first target for sure. You know, historically speaking, that's what happens. And then maybe up here again at 21, you got this candle close rejection at back in January again. Above that, it's really choppy, but you know, you could just identify some of these high points that have been respected more than once. 2386 would be another one. Package or chip tech. Yeah, MACD and RSI both, you know, you could call them lagging indicators, but I use them for, you know, after identifying support and resistance levels, after identifying, you know, the historic price action correlation between the levels, you know, they're really nice for confirmation. And if you're using higher time frame charts like we usually do on this channel, you know, the 4-hour, the daily, even the weekly, you know, a lagging indicator for massive moves, it's not, it doesn't really affect, you know, my trading strategy at all, because you're not chasing time on these higher time frame levels. And besides, you want to see confirmation. You know, if you've got all these different indicators and an edge telling you, you know, that you've got a possible trade here, you know, you could take it just because you've got all the ingredients you're looking for, but it's always best to either layer in or have confirmation that you're going to get the reaction you're looking for. And with that being said, that's probably the last asset I've got time for. 1914 for sure. That's, historically speaking, that's what we get every time those levels are breached. But if you guys want, I'm on Twitter at Trade Nomadic. If you guys, you know, got any other tickers you want me to take a look at, I'd be happy to do it. And let me show that. We've also got a Discord group. I post all my charts on Twitter, on Discord. If you guys want to follow me, we're here every Tuesday at 7 p.m. Hit the likes, hit the subscribe. Benzinga does a hell of a job giving you guys content every day. And I appreciate you joining me. But that is it for this week. I got respect for you guys too. And I will see you next week.